This is the weekend edition of Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, our weekend show is all about the two of us each nominating what we think is the biggest story of the week, the most remarkable story, the sleeper story, and our favourite story. You would think when it comes to like the biggest story of the week and the sleeper story, we would just be able to agree on it because they're almost kind of objective decisions. But that's not the way we operate here. We need someone to make the decision for us. And we have chosen our Fear and Greed colleague, our fearless adjudicator, Adam Lang. Good morning, Adam.
I'm back again. I'm really grateful to you both. Good morning to you too.
The last few weeks have been interesting. You've had some difficult decisions to make.
Every week is a very difficult decision, Michael. Every week.
Do you feel that you've made the right decision?
Yes, I wrestle with it, but in the end I do.
Did you know that this week I thought that we might actually release your score sheet publicly via Instagram?
Do you reckon anyone will be able to read it? It is scribble.
It's terrible handwriting. I have to write fast.
We had a protest after last week because I lost one and I got 21 out of 25. I looked at it and Michael got 20, yet he won and I couldn't believe it. Anyway, we went and had a protest and Adam explained that it was actually a 22, not a 20. And I tell you what, there was a lot of work trying to see the difference between the 0 and the 2.
It's a bit Picasso-esque.
Well, this week we shall be you have been warned, Adam, that that in the interest of transparency, your score sheet will be released publicly.
I'm duly cautioned.
Excellent. So I hope you've ruled your lines very neatly. Let's jump into it. Let's do the biggest story of the week. Sean, can I go first for once on the biggest story of the week?
Excellent idea, yes.
Okay. I say that now and I have immediately regretted the decision because this is a high-risk story for me today because it is always dangerous arguing economics with Sean because obviously, Sean, you know this stuff inside and out and I don't. So I will charge through it because I'm convinced that this is the biggest story of the week. The warning from the International Monetary Fund about the state of the global economy. The IMF's chief economist this week warned that they're expecting about a third of the world to be in a technical recession next year. That is, with the economy contracting for 2 consecutive quarters. Now, Sean, I reckon the New York Times gave the best 2-line summary of the global crisis that I have seen. And for someone like me who likes a good summary, I will cling to this and I will drag this out probably for every weekend edition between now and the end of time. They said, persistent supply chain problems and the war in Ukraine have led to a surge in energy and food prices over the last year. Central banks have been forced to increase interest rates sharply to cool their economies, while it'll tame inflation by slowing business investment and consumer spending. I paraphrase this a little bit. Higher rates could create a series of recessions in wealthy nations and debt crises in poorer countries. I just thought, you know what? That is a perfect layman's explanation of what is going on at the moment. Anyway, the IMF has wound back its growth projections significantly, says the risks now are accumulating. There is a lot of uncertainty out there for financial markets. Australia certainly isn't immune either. And with investors rushing to the security of the US dollar, the Aussie dollar has dropped sharply in the last couple of weeks. This is a very big story. And it is a big story still to come. Clearly, if we are talking about a third of the world potentially being in recession next year, I think it's going to be hard to argue against that as being the biggest story of the week.
Look, I mean, my biggest story of the week is certainly along the same line. So we kind of have to agree that the whole, global outlook is the big story of the week. I suppose mine is more about actually what happened this week rather than forecasts or anything like that. Maybe this isn't the winning entry, but it undoubtedly is the biggest story of the week, probably literally. Figures show core US inflation rose to its highest level in 40 years. The US Federal Reserve, as a result, is now almost certain to lift interest rates in the world's biggest economy by 75 basis points next month. The cost of food, shelter, medical care, things like that in the US has surged. What that does is seismic. Europe will go into recession because rates are rising. The UK probably is in recession. We found that out this week with September growth numbers being released. The US economy may also be in recession. If it's not, the likely 75 basis point hike will put it into recession. Now, Australian Treasurer Jim Chalmers reckons Australia won't go into recession. Maybe he's just being optimistic. What does it mean for us? The Aussie dollar hit a 2.5-year low against the greenback. Who wants to go overseas to America in the next few weeks? There we go. Bond yields have surged. Now, that's not good if you hold them in your super fund. It means your super money has gone backwards. Equities have been sold off. Same deal there. Inflation is the scourge of 2022. And the figures this week from the US shows that it ain't getting any better. Adam.
Well, you're both on the same theme, really. So I think you're both right. Sean, your data from this week. Michael, your data from this week, but about looking forward by the IMF. Incredibly important. So it's hard for me to split them. I'm going to give this one to Michael because I think the scale of the global recession and the data behind the IMF's forecast is really good. And Sean, I know that the US is the biggest economy in the world and it is record of 40 years. So it's a very, very narrow victory. I would say, though, too, I hope and I think Jim Chalmers is right. I don't think Australia will go into a recession. Our commodity wealth is protecting us for so long, and I think that'll continue for a while. But we've also got to remember that these have been record highs, like record low unemployment. Yes, inflation is incredibly high. Interest rates are still coming off record lows. So we've got it pretty good. And even around the world, if we do in parts of it go into recession, the economy is still going to be doing okay.
No, I got nothing. Look, IMF forecasts, dime a dozen. US inflation rate biggest in 40 years that literally will trigger recessions.
Sean's not happy with my judgment.
No, Adam, don't be like that. The last couple of weeks you've been excellent.
I should get a bonus point for bravery doing a topic that I am not the expert here in, but persisting with it anyway and relying extraordinarily heavily on the New York Times to get me through it. All right, let's move on to most remarkable story. And seeing as I had a bit of luck with the first round going first, Sean, I hope you don't mind if I go first again.
Please.
I love a good turnaround story. And we talked a few weeks ago about the spectacular turnaround of the coal companies that had gone from stock market pariahs last year to record profits 12 months later. Well, I reckon that Qantas kind of fits into that category now too, with the extraordinary forecast of a half-year pre-tax profit of $1.3 billion. Incredible, remarkable, considering it accumulated $7 billion in losses during COVID with planes grounded and staff laid off.
Okay, Michael, I'm going to jump in here. And I get that I'm a bit angry today, and I apologise for that. Do you think it's really remarkable, $1.3 billion, considering how much they're charging us every time we fly?
That is a very good point. Look, it is remarkable how expensive flights are at the moment. Yeah, so we'll just add that in there, and I'll take an extra point as well. I hadn't actually included any reference to.
Well, I'll take that point for you.
Oh, are you now accepting my pity points, Sean? My scraps.
Go on.
All right. What we need to keep in mind here, and this is why I think it is so remarkable, that the pandemic actually did claim one airline scalp in Virgin Australia, if airlines kind of have scalps, which is a kind of a gory kind of graphic image. It obviously went into administration in April 2020. Qantas survived the pandemic. Demand is now soaring. Fares are now soaring too, aren't they, Sean? And PR nightmare for Qantas over the last 6 months or so. Late and cancelled flights, lost luggage, the threat of industrial action, which really does smart actually when you consider how much we are paying, Sean, for those flights. That's what makes this story so remarkable, that clearly for all of its problems, all of the challenges that Qantas has, the amount we are being forced to pay to fly on those planes, we are still flying with the national carrier. And judging by the share price this week, investors are pretty happy too. I think that's remarkable.
I think it's remarkable too. I do agree wholeheartedly with you. And it's kind of particularly remarkable for those that can fly, for the middle and upper classes, Michael, that you're sort of people. Let me tell you about my most remarkable story, which is also corporate, and it affects everyone. Everyone from the high flyers like you and even the higher flyers like Adam, right down to the poor, piteous people like me. It's basically about a sector that every one of us use and mostly invest in via our super funds. The banks. What a remarkable turnaround in sentiment from the big financials this week. I'm not talking about the last few months of higher airfares. I'm talking about this week. It's all because Bank of Queensland came out and said net interest margins, that's basically the difference between what a bank pays on a deposit and receives on a loan, expanded. That's what big investors have been waiting for. It was like the starting gun had been shot. It was a sign that the rising interest rate environment finally will help the banks make more money. Westpac's share price jumped 7% in a couple of sessions, and the other big three, Commonwealth Bank, National Australia Bank and ANZ, weren't far behind. While most other sectors were going backwards, the banks soared. National Australia Bank is closing in on becoming a $100 billion company. That's the fourth in line behind BHP, Commonwealth Bank and CSL. Combank share price is heading back towards $100 a share. It truly was a remarkable week for the banks. Adam.
Okay, this is a really good contest. Turnaround by Qantas is great. And Michael, I was wondering, from the PR nightmares and this good performance, and investors have rated Mr. Joyce and his company Qantas very highly. Do you think, much like during the pilot strike, this will lead to an emboldened Alan Joyce?
Yes.
Well, he did say during the week that he wasn't going to quit. They asked him straight out.
Yes.
Said, given what's happened, this on the day that he said, we're going to make our first profit since 2020, 1.3 billion, which is remarkable, undoubtedly. Then a journalist says, so are you going to quit?
That's the question that you ask before you hear about the profit. Yes.
That was last week's question, not this week's
He
question.
may well have had that on his list of questions to ask. I'm going to ask it anyway.
That's right. Anyway.
The bank's performance, really interesting. I think, Sean, just a few years ago, we're in the sea of the Royal Commission, and now that sentiment is shifting, net interest margins coming through and their performance is better. I think on the scale of the banks, meaning how much money, capital they've got, how many employees they've got, I'm going to give it to the banks on this one. So, Sean, you win.
How do I gloat when I win? I was ready for a narky comment towards you, Adam. The whole lot had lined it up. I was going to say, but the banks are big and Qantas, everyone just likes talking about Qantas, but so what? And then you give it to me.
I'm sorry to have let you down, Sean.
Jeez, I'm really cranky today and I don't know why. Haven't had my cereal.
It's the weekend. You should be happy. You should be kind of feeling relaxed.
School sport has started again this weekend because I'm in New South Wales and schools have started back and school sport starts this weekend. So my weekends are now full of cricket and touch football and things like that. And maybe that's just put me off a little bit today.
Pending rain, I would just suggest, Sean. Pending rain.
Hopeful. Righto.
All right. We will come back in a moment and find a sleeper story for this week. All right, we are looking for the sleeper story of the week. So this is a story that's maybe not getting the attention that it deserves, or that might become a bigger story further down the track. I know that whenever I talk about stories that are kind of looking ahead, Sean tends to criticize them. So it feels like the criteria for this category are getting increasingly narrow based on what Sean wants it to be. And it makes me very apprehensive about my story for this week. So Sean, you go first while I maybe reconsider my story choice.
Okay. For me, it's what's happened in the housing market this week. We're all worried about house prices falling by 15, 20%. And it seems there are plenty of people out there who think that's exactly what will happen. Maybe it will. But there were just a few positive signs this week about the housing market. No one's really talking about it because everyone's talking down the housing market. But the first one, the national auction clearance rate, hit its highest level since May last weekend, with bargain hunters seemingly entering the market. The national preliminary clearance rate hit 63.4%, according to CoreLogic. In Melbourne, it was more than 68%. Pretty impressive. Then, later in the week, online property group Domain released a report showing that house and unit rents have reached new record highs across capital cities. House rents are up nearly 13% over the past year. Unit rents are up 17%. Not good for people renting, clearly, but it is good for people investing or owning homes. While the pace of growth of house rents is slowing, they're accelerating for units. That will help sustain house prices somewhat. The other fact that gives just a little more confidence about housing is how many people are trying to get into Australia. The federal government this week said about 2.2 million new visa applications were received since 1 June. That's students, temporary skilled workers, visitors. About 1.35 million were approved. That's a lot of people to house. Immigration definitely puts upward pressure on house prices, particularly in capital cities. Don't think anyone's about to say the housing market won't fall lower, but there are just some positive signs this week that maybe the pace of the decline is slowing, and that's why it's a sleeper story. Michael.
All right. Look, my story is a true sleeper because if you weren't at the Financial Review's Energy and Climate Summit this week, then you may well have missed it entirely. And I'm talking about the confronting forecast for power prices next year. The bosses of Alinta Energy and Origin Energy agreed that tariffs would likely rise 35% next year, and that could just be the minimum. So we've just obviously come through a really tough winter for power bills, massive rises right across the country. The median household electricity bill has risen $300 since April. And I think a lot of people would kind of be expecting that we're through the worst of it. But no, we obviously have a global supply crisis. The system is grappling with the transition to clean energy. The pressure is on existing assets to keep operating until that renewable infrastructure can be built. And as much as we'd like to think that the worst of the rises are over, there is more to come, and it is going to hit households and businesses really, really hard. 35% minimum. Huge. It is a true sleeper story and a pretty alarming one at that. Adam.
Michael, I loved your brave Sir Michael approach by letting Sean go first on this story. Mm-hmm. And power prices up 35% is huge. Property is going to win this one, I think, because the scale of money involved in property in Australia compared to the scale of money people are required to spend on power prices, even if they go up 35%, property is going to have a bigger impact. And I think we have an endemic supply issue of a lack of property, particularly in metropolitan areas. Immigration adding into the mix with some of the worst of the news behind us economically, I think property prices is going to be the biggest story coming, and so that's my sleeper story of the week.
Oh, Anna, you've just ruined my complaint. I already had a complaint lined up.
I'll make mine. Go.
Well, I wanted to know what the definition of a sleeper story was, given that this story was on every major news outlet around, the energy story. What is the definition of a sleeper story?
Hang on. The energy story, what the property price, if you go up to...
Let's just move on. Can we just move on, Michael?
Yes. I don't think any of our rules would stand up to too much scrutiny.
If you got to anyone in the public and say, are power prices going up next year? They'll probably say, no, I don't reckon they will. They went up enough this year.
Do you reckon they'll say that?
I reckon they would. But if you went up to them and said, hey, excuse me, Joe Public, do you think property prices are a sleeper story? And they're like, nah, mate. Everyone knows about property prices. Anyway, look, it was more of a token complaint than anything. I do actually quite admire the decision, the bravery of it. Okay, favourite story of the week.
Go for it, Michael. Go for it.
I'll go because I was going to put this in as the biggest story of the week. Complete honesty, full disclosure, this should have been the biggest story of the week because what can be more important than saving the planet? But instead, I decided to make it my favourite story of the week because I didn't think it was going to win. This week, we learnt that NASA's mission to knock an asteroid off its usual orbit was a huge success. A few weeks back, they smashed a small spacecraft into a rock at a speed of 23,000 kilometers per hour. Any change to its orbit greater than 73 seconds would have been a success. Instead, they shifted it by more than half an hour. What a tremendous triumph for technology. And I think we will all sleep a little bit easier knowing that if we ever have an asteroid hurtling towards Earth, we might be able to knock it out of the way. And Adam, if you don't agree that this is the favourite story of the week, do you know who would agree? The dinosaurs.
Oh, yes, good point.
They would have appreciated this technology back when they were dealing with a space rock of their own. There you go. Sean, over to you.
Oh, look, how can I compete with something saving the world? I don't know. Don't think I can.
Did you just forfeit?
No, I didn't. I mean, I'm a little bit closer to home. You know, my household has lots of people in it, and most of them are at driving age. So my favourite story of the week was one about second-hand car prices falling fast. Finally, having spent the past 3 years pretty much increasing. It was a really unusual anomaly during the COVID that because supply chains were disrupted so severely, people couldn't get new cars delivered, so they were all looking for used cars, and the price of used cars went up. That never happened. Remember, you drove a car out of the dealership and you lost your first 20% as you went out the driveway? Quite the opposite. There was also a global shortage of semiconductor chips, so many cars couldn't get built. According to Moody Analytics, used car prices are still 15% higher than a year ago. They're up about 60% on the beginning of the pandemic, but finally, they're coming off. And having fallen for 4 months in a row, thanks to new cars arriving in the country, people like me with big families are really, really excited. That's why it's my favourite story. Adam.
Okay. NASA Saves the Earth wins this one. It's a wonderful story. Technology over a big rock a long, long way away. Secondhand car prices, I'm welcoming that too, Sean. I think it's been remarkable how much they cost.
Your kids are getting there.
I know, they're so close. So that's 2 stories apiece. Again, it comes down to the scores, and it is the narrowest of margins. Sean, 88 points. Michael, 87 points.
I have never won one where we've had to count back the points. This is you know what, Adam? Well done, and well done, Sean. You did deserve the win, but I'm also glad that we will be releasing publicly the score sheet.
Let me just get the Tipex out and fix it up.
Yeah.
The what?
Yeah, I know. Good question. Unfortunately, Adam, I knew exactly what you were talking about.
Goodness me, that's our second reference to dinosaurs in 2 minutes.
Very good.
All right. Thank you very much, Sean.
Thanks, Michael.
And thank you, Adam.
Thank you.
Make sure you're following the podcast. Join us online on LinkedIn, Twitter, Facebook, and of course, Instagram, where you'll be able to see Adam's score sheet. And don't forget to check out our new podcast, How Do They Afford That?, featuring Canna Campbell, the founder of Sugar Mama TV, all about making your money work a little bit harder for you. I'm Michael Thompson. Have a great weekend.